Hello to all friends and trading enthusiasts. In this video, we are going to review one of the most powerful and widely used scalping strategies, namely the scalping strategy on the 5-minute time frame using exponential moving averages, or EMA. Many traders quickly think of the 1-minute time frame when they hear the name scalping, but the truth is that the 5-minute time frame is one of the best options for scalpers. Why? Because on the one hand, it is fast enough to create multiple opportunities throughout the day, and on the other hand, it has less noise and false signals than much shorter time frames such as 1 minute. Therefore, trading on the 5-minute time frame is an ideal option for both professional scalpers and beginners. In this method, we use 4 exponential moving averages: EMA 9, EMA 17, EMA 25, and EMA 30. Each of these EMAs has a specific role in identifying trends and receiving signals. When we put these 4 tools together, we get a clearer picture of the direction of market movement and can find more optimal entry and exit points. The exponential moving average is actually one of the most common technical analysis indicators whose task is to show the overall market trend. The main difference between EMA and simple moving average, SMA, is that EMA gives more weight to new data. In other words, EMA is more sensitive and reacts faster to recent price changes. This feature is exactly what is considered vital for scalpers, since scalping is based on fast and short price movements. Now let's look at the 4 important EMAs that we use in this strategy. The entry rule in this strategy is based on the cross, intersection, and the position of the candles relative to the EMAs. Now I will explain step by step. Determine the general direction of the trend. First, look at the price position relative to the EMA 30. If the candles are above the EMA 30, the prevailing trend is bullish. If the candles are below the EMA 30, the prevailing trend is bearish. Coordination of the middle EMAs. Now you need to see if the EMA 25 is in the same direction as the EMA 30. In the bullish case, EMA 25 should be above the EMA 30. In the bearish case, EMA 25 should be below the EMA 30. The main entry signal with EMA 9 and EMA 17. These 2 EMAs are responsible for giving a quick entry signal. In bullish mode, EMA 9 should cross EMA 17 upwards. In bearish mode, EMA 9 should cross EMA 17 downwards. Confirmation with a strong candle. The EMA cross alone is not enough. It is better if a strong candle, for example, a long bullish candle in a buy position or a long bearish candle in a sell position, appears after the cross to confirm the signal. Entering the trade. In bullish mode, after the confirmation candle closes above EMA 9 and 17, we enter a buy position. In bearish mode, after the confirmation candle closes below EMA 9 and 17, we enter a sell position. By following these 5 simple steps, your entries on the 5-minute time frame will be much more systematic and accurate. These rules will help you to put aside emotional entries and only enter a trade when all market conditions are in line. EMA 9. This average works very quickly and is mostly used to detect short-term movements and early entry signals. EMA 17. Its role is to filter the signals of EMA 9. Simply put, when EMA 9 crosses EMA 17, the first sign of a trend change is obtained. EMA 25. This EMA is actually an intermediate layer that makes the overall trend direction clearer and prevents hasty entries. EMA 30. This line is usually used as a reference for the main market trend on the 5-minute time frame. As long as the price is above EMA 30, the market is bullish, and when it is below it, the trend is bearish. The combination of these 4 EMAs allows us to detect both the overall market trend and have more optimal entry and exit points. Instead of relying on 1 or 2 averages, Using multiple EMAs puts more filters on the signals and increases the accuracy of the strategy. Thank you for liking the video. Let's go to the most important strategy from which you can learn a lot. In 5-minute scalping, as price movements occur quickly, timely exits are even more important. First, stop loss. In this strategy, the stop loss should always be at a logical and specific point. The best way is to place the stop loss behind the last low or high of the candle. In long trades, the stop loss should be slightly below the last local low. In short trades, the stop loss should be slightly above the last local high. This will limit your losses if the market moves against your expectations. 2. Take profit. To exit a trade with a profit, you can use 2 methods. The first method, a fixed risk-reward ratio, for example, 1:2. That is, if you risk 5 pips, your goal is to make 10 pips of profit. The second method, exit based on EMAs. When the price has moved far away from the EMA 9 and 17, and there are signs of a reversal, it is a good time to close the trade. Third, lot size management. Never risk more than 1 to 2% of your total capital on a single trade. Even if you have a few successful trades in a row, you should not increase the volume excessively. Scalping, due to the large number of trades, can quickly empty your account if done without capital management. 4. The importance of quick exits. One of the common mistakes of scalpers is that they stay in profitable trades for too long and lose all their profits in the hope of more profit. Remember that the philosophy of scalping is small but safe profits. So, when you reach your target, close the trade. Advantages of the strategy. Simplicity of implementation. The rules of this method are very clear and specific. Just place 4 EMAs on the chart and wait for the crosses and confirmation of the trend. Even novice traders can learn it very quickly. Fast and accurate signals. Especially the combination of EMA 9 and 17 gives very fast entry signals and creates many trading opportunities on the 5-minute time frame. Trend management. EMA 25 and 30 help you trade only in the direction of the main trend and prevent false entries against the market direction. This increases the probability of successful trades. Usability in various markets. This strategy is not limited to Forex. It can be used on the crypto market, indices, even commodities such as gold. Disadvantages of the strategy. False signals in a ranging market. If the market is in a neutral and trendless state, consecutive crosses between EMAs will occur and many false signals will be generated. This can cause consecutive losses. High concentration required. Since the 5-minute time frame moves very quickly, the trader must constantly monitor the chart and not miss any opportunities. This is not for everyone. So friends, so far we have learned step by step about the 5-minute time frame scalping strategy using 4 exponential moving averages. First, we learned why the 5-minute time frame is one of the best options for scalpers because it offers both many trading opportunities and has less noise than much shorter time frames. Then we learned about the role of the 4 EMAs, EMA 9 for quick signals, EMA 17 as a filter, EMA 25 for trend clarification, and EMA 30 for identifying the overall market direction. Now it's your turn to test this strategy on a demo account. I suggest you practice for at least a few weeks to get to know the behavior of EMAs. When you see that your results are stable, you can gradually move on to a real account. Remember that there is no magic strategy that will always make a profit. The secret to your success lies in the combination of 3 factors: the right strategy, risk management, and emotional control. If you used this tutorial and it was useful to you, be sure to like it and subscribe to the channel so you don't miss the next videos.